Okay, so if the whole sector is about to boom, who are the actual players we should be looking at? Let's profile three specific companies that are in a fantastic position to really capitalize on this opportunity. First up, we've got Count Industries. These guys are the biggest exporter of bed linens from India globally. While the US is their main market, the UK and Europe already make up about 12% of their sales. With lower tariffs, well, you can see how that number is set to grow. And they've got a seriously bold target to double their revenue by 2028. Next, there's KPR Mills. This is a huge integrated company. They do everything from spinning the yarn to making the final piece of clothing. Now, the key thing to notice here is their export exposure. A whopping 36% of their revenue comes from exports, and more than half of that goes to Europe. So a new trade deal with the UK would be a direct shot in the arm for their bottom line. And finally, let's talk about Vardman Textiles. We're talking about India's #1 spinner of cotton yarn. These guys are deeply, deeply woven into the global supply chain. They export to over 60 countries and supply massive brands you've definitely heard of, like Walmart and H&M. They are exactly the kind of company that's perfectly positioned to benefit from better tariff deals. All right, now as exciting as all of this sounds, we have to be smart about it. It's absolutely crucial to add a little dose of market reality to balance out all this optimism. And this slide really lays out what we could call the investor's dilemma. The upside is crystal clear, right? Tariff-free access, strong demand, it's all great. But here's the catch. The market already knows this. Stock prices for these companies have already surged. For instance, KPR Mills is trading at a price-to-earnings ratio of 55. That's over 3 times its 10-year average. So while the outlook is fantastic, a lot of that good news might already be baked into the price.